Hello, welcome to this week's Forex Outlook here at xm.com. My name is Rafi Barjan, currency analyst, and with me is our chief economist, Michalis Florentidis. Michalis, this week we saw quite a bit of risk appetite, mostly on the back of optimism on the US-China trade talks, which resumed in Washington this week. We have been hearing multiple reports of progress, but nothing too concrete yet. We also saw some interesting moves. We saw gold touching multi-month highs. We also saw some volatility in the commodity-linked Aussie and the Kiwi. Sterling, on the other hand, did relatively well. So please tell us in more detail what were the main drivers of the past week.
It was a rather mixed week. It's tough to say that the week had a definite indication towards certain outcomes, especially, as you say, in the trade negotiations. But as you said, it has been more optimistic tone. So the markets are certainly expecting something positive to come out of this. At the very least, a delay of the sanctions are going to kick in at the 1st of March, according to what President Trump said. So this was provided a little bit of underpinning for risk assets. In terms of the Brexit, we had the pound doing very well, although again it was more on the tone of what is going to happen between the UK and the EU, that nobody wants a no-deal Brexit, so kind of conciliatory, the statements from both sides. So without any other real factors, okay, we had some members of parliament breaking off from their main parties and finding a new movement in the UK, but it's tough to say if this is going to change the political landscape in the UK and what impact it's going to have on the pound, to be honest. In other currencies, we had the loonie doing well because of oil climbing to more than 3-month high. On the other hand, the Kiwi didn't do very well despite this optimism about trade because of expected, like a little bit of a dovish expectations regarding the RBNZ and what it's going to do, but in the far future and not immediately. So a bit of a soft tone in the Kiwi. So having said this, despite other things to watch for, despite trade and Brexit, I might add, of course, the Eurozone PMIs came out and they showed quite a lot of weakness in Eurozone manufacturing, as did the IFO survey, but this did not impact the euro so much. So what do we have to look for next week?
Well, it's all going to be just going to be about data in the coming week. In the US, we're going to have some of the delayed numbers, particularly on GDP and the core PCE inflation. Those are going to be finally coming up next week. So those will be the highlights of the week. We're also going to have out of the US the ISM manufacturing PMI. This week we saw some weakness from the Philly Fed manufacturing index as well as the market PMI. So if we do see some weakness in February, even if the other data come in on the upside, it's still going to maintain that some fears about the outlook. For out of Australia, you mentioned about the Aussie. It could come under further volatility in the coming week. We're going to have the fourth quarter construction work done numbers as well as capital expenditure estimates. So those will be an indication of what's to come in the GDP growth numbers in the following week, so they will be watched closely. We're going to have Chinese manufacturing PMIs, and then from the Eurozone, we're going to have the flash inflation numbers. We are expecting early in March meeting from the ECB downgrade of the ECB's forecast. So if we do see some weakness in the latest inflation numbers from the Eurozone, that could again be an indication of what the ECB forecast will be showing. Out of the UK, the only highlight it's going to be the manufacturing PMI, but we could get another vote on Brexit. We still don't know what kind of vote this would be, whether or not they're going to have another meaningful vote, or whether just going to be voting on amendments. So Brexit will once again be dominating the headlines for sterling, at least.
That will be interesting. To sum up, maybe I could say, Rafi, that there is some optimism regarding the trade negotiations. There is also some hope because central banks around the world are turning a bit dovish, and that's providing support for risk assets. But actually, economic data and survey data are turning a little bit soft, especially with the fourth quarter US GDP. We'll see whether there has been some slowdown in the US economy. Will be very interesting to watch. Thank you very much for your input, Rafi. Thank you everyone for watching, and have a great day.